Today I'm going to go over my trading strategy that I have been using for the last 25 years that allow me to make a living just few hours a day working on my computer. This is not about guessing or gambling. This is simple, repeatable system that will help you identify the high probability trade and you can manage risk like a pro. Avoid the biggest mistake that the new trader make. By the end of this video, you will know step by step how I make my trade. That all rely on a good set of rules, so let's dive in. Rule number 1, never buy based on emotion. FOMO, fear of missing out, and panic will blow up your account. Trading is all about discipline and execution, not feelings. So right here on the chart, as you can see here, the FOMO, they try to buy when the market make it high, low, and then they think the market will go to explode and go up, but they didn't know that this is the sell zone. This is where a lot of sellers are sitting here. That's why they try to buy here, and the market turn around and then wipe out their account. When the market going down, the market start make it low, high, and then low. The FOMO trader, they jump in, they try to short the market, but they didn't know that there is a buy zone support in this area. So that's why the buyer, they buy before, they would step back in, they buy again. So when the market break out here, and that's where the market is supposed to go higher. A lot of new traders out there, they don't know where to define the sell zone, the buy zone. That's why they blow up their account. Rule number 2, you only need to focus on one symbol ticker. Why? Because you will more focus and you know the chart pattern that what they're doing in the past and the future. Jumping around between stock to stock will blow up your mind and blow up your account. So this is a symbol ticker that I'm looking at. They call E-mini SB 500. So this ticker, the symbol is ES. So this one is the one index future that combine 500 stocks in the S&P 500. Instead of looking at 500 different stocks in the S&P 500, by focusing on one simple ticker, I don't have to look at 500 stocks in the S&P 500. I don't have to move a chart around. I don't have to worry which one is going up, which one going down. By looking one simple ticker ES here, I can tell the overall market direction where they are heading to. I will stay in focus. Rule number 3 is have a clear entry and exit. Most of the new traders, they don't know where to enter and where is the target. I'm not getting to the trade unless I know those two things. So what is the sell zone and buy zone? The sell zone is where the seller, they are selling before over here. So the people that they try to go long at this level, but they didn't know that the market turned around. So when the next time when the market come back to where the seller is sitting here, so they have a strong resistance there because those people they bought it right here. They only wait for the market to turn around so that they can get out. That's why they sell it right here. For the buy zone, when the market they put it low, high, and low, people they try to short the market, but they didn't know it. This is the buy zone. The buy zone is where a lot of sellers they try to short it here, but they fell and the market run up to the sell zone. So next time when the market pull back here, the buyer, they buy over here, so they will defend this level here till they come back here, and then they buy again. That's why they put it up again. So when the market be able to break out the downtrend line, I will go up, I will buy it here, and then I just stick with the uptrend until they break out the upper support trend line, and then I get out. So I will get out right here at this moment when the price is drop below this upper support line. If the market trending, you see that high low, high low, low. That's why it's still going up. So no reason for you to get out. So now the market pull back a little bit, but this low still higher than this low, this high still higher than this high, and this high still higher than this high. So that's why they give you a clear cut that you can draw a trend line from the last one to this one. That's why you draw the line right here. Rule number 4, always have a stop loss. Without stop loss, you are gambling. The smart trader, they know how to protect their capital. Trading is not about the profit. Trading is all about money management. So if you know how to manage your money, let's say you win 50%, you lose 50%, but if you have a good risk management, at the end you still make 20%. The reason is if you're able to control your stop loss at the 2% rule or less, you will be winning at 20%. So if you look at the chart here, most of the traders, they don't know where to enter. But for me, I know that exactly when the market be able to break out the sell zone here, this is a good entry point. Let's say you enter the trade here, and then you can put your stop loss anywhere below here, and then the market run up, and every time they make a new high, and you can move your stop loss up. So you do that until they are breaking the upper support trend line, and you are completely out. Let's say you get in the trade here at the 57.1360, and then they go up to, let's say you get out here at 57.56, that will be 43 points. That will be $2,150. Let's say you are the beginner. They don't know to enter the trade without a stop loss. If they enter the trade here without a stop loss, let's say they put a stop loss here. Without a stop loss, the market can go down, and then you can lose a lot of money from here to here. Or if they enter the trade right here, because if you have a stop loss right below here, let's say you get in it early, and the market is still not able to break out this level, and the market can come back and take you out, but you only lose this much. So in terms of risk reward, you only risk this much from here to here, but your profit potential is up here. That's a lot. Rule number 5, Trade with the trend, not against the trend. This is the chart that most normal traders out there be able to see. This one is called candlestick chart, green and a red candle here. So that's why they get confused. So when they just jump in and then the candle turn red, they get out. And then a few minutes later, they only see it go higher. When they go up here, they get nervous, they get out because of the red candle here. And then market turn around, make a new high, they go up. So they just go up a little bit and then they see the red candle, they nervous, they get out. If you are a good trader, they will never sell, they will hold up their position until they break out at the support trend line here. But at Stock Navigator, we have a better chart we call algo trend chart. The candlestick will keep you in the trend because the green and the yellow candle will hold you up until they break out the level of support here. As long as the candle is still green and yellow, the trend is still up. That's why you don't even bother to worry until they break the support and the candle they turn to red candle, that they tell you that the trend is over and then they start pull back down. And when the candle turn red, it means that you stay in the short side only. Trading is not about luck. Trading is all about the follow a set of rules. If you follow these 5 rules, you'll be a successful trader. If you want to join the Stock Navigator family, if you want to get the algo trend chart, if you want a full mentorship, we talk to students every day. If you want to see how we trade live in front of students every single day, click the link below. I will see you there.